About a year ago, I got a real wake-up call when it comes to short sales and foreclosures, whereby the FDIC, I found out, was basically paying IndyMac Bank to foreclose on its clients. I did this video today to explain to homeowners why they can't get that elusive loan modification and how our government and the banks we're working with are not only not working with homeowners, but they're actually working against them. We had your typical perfect short sale client, a guy that hadn't had a job for 2 years, was going through a divorce because of his financial situation, with 3 kids. We'd sent documentation, his bank statements, everything to the lender, and it showed that he had very little money to work with. So it just surprised me when we got this demand for a $75,000 promissory note. What that caused me to do is do some more research. What the FDIC does in a loss share situation is when investors want to buy a bank, they try to sweeten the pot a little bit and they say, okay, if you buy this bank from us, we'll cover 80% of your losses on these loans over the next 10 years. When I found out that OneWest, formerly IndyMac, when George Soros and Michael Dell and Steve Mnuchin and these guys formed OneWest and bought IndyMac from the FDIC, I found out that they had one of these sweetheart loss share programs in place. When I wrote this blog in September of '09, there were 65 lenders that were currently under a loss share program with the FDIC. Today there's 167. In our situation, they calculated out to, if OneWest foreclosed on the property, they actually stood to make over $100,000 in profit. The loan amount that was owed on the loan was $485,200. OneWest Bank paid 70% of that loan amount, which for a total of $334,600. We sold the home for $241,000 net to OneWest Bank. So we have an original loan amount of $485,200 minus the sales price that was netted to OneWest Bank of $241,000, and you end up with a net loss to OneWest Bank of $244,200. According to the loss share program, you then take 80% of that amount, which comes out to $195,360, and that's the payment that the FDIC makes to OneWest Bank. So if you take that $195,360 and add it back to the $241,000 that we sold the home for, you get a total of $436,360. Now remember, OneWest paid $334,600 for the loan. So you take the $436,360, subtract $334,600, and you end up with a net profit to OneWest Bank of $101,760. Now, that's fine and dandy. My problem is they agreed to do the short sale only if my client agreed for the next 10 years to do a $70,000 promissory note with him. A guy that hadn't had a job for 2 years, was going through a divorce with 3 kids. How much is too much here? I mean, now 100 grand isn't enough for them. They want to make 175. My problem is the false hope that folks have every time a government program is rolled out. 95% of my clients that end up doing short sales have already tried a loan modification. Most of them have tried a government program. These government programs, to be honest with you, that have been rolled out over the last year have been a joke. Hopefully this time someone in Washington gets this message and realizes we need to start doing something to help homeowners.